And we're back. And so thank you everybody for coming into this Select Chicago Week 7 of our Foreign Direct Investment Conference. I'm really pleased to invite Alison Germak from the U.S. International Development Finance Corporation to talk about the great programs that she has that works both with economically challenged countries as well as being able to, excuse me, assist with critical technologies looking to onshore in the United States. So Alison, I've gotten to know you pretty well over the last year and a half with some of the times you've come to visit us in Chicago. I know you're based in DC. It's sad that you're not being able to be with us today, but you have such a great background and a great program. So I'm going to turn off my camera, have you introduce yourself and start the program, and then I'll come back in for some Q&A.
Great. Well, thank you so much, Michael, and thanks to Select Chicago for the opportunity to be live with this group today. I'm sorry I'm not in person. I'm sure we would all prefer to be in person if we could, but this won't be, I hope, the last time we'll have an opportunity to exchange views and communicate with one another. So we'll think of this as the first of many opportunities to connect. But again, my name is Alison Germak. I am the Deputy Vice President of the Office of Development Credit at an agency called the U.S. International Development Finance Corporation, which I know is a mouthful. We use the acronym DFC. We are, relatively speaking, a very new federal agency. We were launched only earlier this year, so we haven't even had our first birthday. But what I can tell you is that our foundation goes back many decades. Before we became the DFC, we were another federal agency known as the Overseas Private Investment Corporation, or OPIC. Some of you may have come across OPIC before or had an occasion to interact with us. So we're building off of our foundations as OPIC with some new bells and whistles, so to speak, which has now become the Development Finance Corporation, DFC. So what I'd like to do today is tell you a little bit about the DFC's mission and our products, which I think have relevancy for companies in the Chicago area that are thinking about how to further expand their business, how to engage internationally. And then hopefully leave a little bit of time for some discussion or to answer some questions. So with that, I will get started. I do have a PowerPoint presentation. Hopefully everyone can see these slides. And it will help to be, I think, a visual to illustrate some of the concepts that I'll be discussing over the next 9 or so slides. The first slide here, if I forward on, is just a description of our agency. We're what's known as a development bank. Most developed countries globally have their own development bank. We are the United States Development Bank, and our role is to help by providing a suite of financial products to help companies invest in or grow their businesses in what are considered international emerging markets. There's a slide a bit later in this presentation which will show you some of the regions where we work, but some of our most active regions include Latin America, Africa, the Indo-Pacific, as well as parts of the Middle East and Eurasia. We are looking to accomplish 3 goals simultaneously as we think about how to provide our financial products. We are looking first and foremost with a development mission. So by focusing on what are typically lower income or lower middle income countries, we're looking to help catalyze more economic development in these regions where perhaps the private sector may not have the full access to the commercial financial products needed to really grow and scale. Secondly, we are considering foreign policy. as we think about our goals and our objectives. We're looking to advance goals like an initiative known as 2X, which is a women's economic empowerment initiative, just to give an example. And then third, we are not an aid agency. So the financial products we offer are offered with returns in mind, meaning that we are looking to be a self-sustaining agency. We charge fees on our financial products so that we continue to operate at no cost to taxpayers. So this slide here quickly outlines the 4 primary financial products that our agency, the DFC, offers. I'll talk a little bit about each product, and then certainly to the extent that there are questions or there's an interest in having more detail about product terms or product processes, I'm certainly happy to expand on those as we go along today in our session. The first product and the second product listed from left to right are products that we offered as OPIC. So maybe to take a step back, as I said, we at the DFC grew out of another agency known as OPIC. OPIC was formed in the 1970s, again, with a very similar mission to catalyze economic development in lower income and lower middle income countries overseas. The challenge, of course, is that there wasn't a lot of evolution to the agency since the 1970s. And so we recognized, I think our stakeholders recognized that there were some really critical tools missing from the OPIC toolbox. This prompted the passage of legislation in 2018 called the BUILD Act, legislation passed by the U.S. Congress that set up the foundation to create a new agency called the DFC, which would absorb OPIC, also absorb a credit guarantee program that was being run out of U.S. Agency for International Development, USAID. Combine those together so you had really a one-stop shop for companies that were looking for tools to support an investment that they were making in an emerging market country. So these first 2 tools that you see on the screen, political risk insurance and debt financing, these were tools that were offered by OPIC. The second 2 tools, equity financing and technical development, these are new to the DFC. So these were capabilities that were created, again, recognizing that companies needed more tools to be able to fully access some of these really important and growing markets internationally. Political risk insurance, if you're not familiar with that concept, it's essentially a insurance policy that you can take out from, in this case, the DFC, that helps to protect your company, your assets, your income against losses resulting from political events. I can give a couple of examples. If you are operating in a country and you have concern about the outbreak of political violence, whether that be war, revolution, politically motivated civil strife, acts of terrorism, and more specifically, you're concerned about the impact that those activities could have on your investment. What happens if your facilities are damaged? What happens if your vehicles are destroyed? What happens if you're not able to operate your business for several months because of unrest in the country? This insurance through the DFC can help to mitigate that risk and be able to provide you some compensation in the event you suffer a loss resulting from political violence. We cover other risks as well. We cover the risk of government expropriation. So if you're concerned about a government expropriating or nationalizing your investment, or perhaps just taking steps that incrementally deprive you of your rights as an investor, such as revoking or canceling a concession. And then we do also offer coverage under political risk insurance from something called currency inconvertibility. So if you're concerned about a government intervening in the foreign exchange process and preventing you from converting your currency, your earnings from local currency to US dollars or remitting US dollars back to the United States, our insurance can also protect against that type of concern as well. In addition to offering political risk insurance, we do also offer debt financing. The division that I work in the DFC is called the Office of Development Credit. This is the bulk of what we do. In my office, we primarily focus on debt needs, meaning loan requests of 50 million down to 1 million. And focused in a whole variety of sectors. I'm going to give you some examples on a subsequent slide. But you can think about it like a commercial term loan that you would take out for your business. In essence, what we're doing is we're stepping into a void that you may find yourself in these emerging markets where commercial banking products may not be available or fully available. We offer direct loans typically from 5 to 15 years in tenor, and the proceeds of the loan are used to fund costs associated with an investment. So let's say you have a food commodity processing facility in West Africa. You're looking to upgrade the machinery or maybe add additional processing lines, or maybe you're looking at building a second facility in a neighboring province. We can provide a direct loan, the proceeds of which would be used to pay for costs such as acquiring land, constructing a facility, purchasing equipment, working capital, and all the soft costs associated with making an investment or expanding your company. We, in addition to debt financing, now as the DFC have the capability to provide equity financing. This is a very new capability. Like I said, the DFC is less than a year old. We've executed a few equity transactions to date. Most of those have been in support of private equity funds. So a fund manager that's raising a pool of capital to make multiple private equity investments into companies in a target market, whether that be Africa or Asia or Latin America. Our transactions to date have primarily been working with those private equity funds. We do, however, have the capability and have done a few transactions with direct equity, meaning that we make a direct equity investment into an overseas company to help it scale. So these are often companies that are young, technology-focused, fast-growing, and are looking for equity to help them to truly scale. And then the final product we offer is technical development assistance or technical assistance, which you may know by the term TA. We have the capability at the DFC to offer technical assistance through what might be constituted as a grant type mechanism to support companies typically in our pipeline, meaning loan applicants or possibly equity or insurance applicants that believe they could benefit from some additional technical assistance to help them improve an aspect of their operating model, or perhaps to commission a study to help them improve the development outcomes of their business. But we can provide small technical assistance funds to help companies to be able to make improvements in these very targeted areas. As I mentioned earlier, again, the DFC's focus is strictly international. So we work supporting often U.S. companies or U.S. investors, but which are making investments in countries outside the United States. Our focus more specifically are in countries that are classified by the World Bank as low income or low middle income. So we have about, in total, among all of our products, the loans, the equity, the technical assistance, we have just shy of 30 billion in outstanding exposure. On this slide, you can see the breakdown by region. You'll note that our two largest regions, in fact, are Latin America as well as Sub-Saharan Africa. The other thing I wanted to take the opportunity to mention today is a relatively recent announcement from our agency called the Roadmap for Impact. We're just providing some information on our website. So if you visit our website, dfc.gov, you'll see some of this information. But essentially, our agency has set an ambitious target that by 2025, we want to catalyze $75 billion in development funding for investment activities in low-income and low-middle-income countries. So what we're looking to target is, probably in the range of $25 billion in direct DFC funding, which will catalyze another $50 billion from private sector or counterparty investors. The different themes within the Roadmap for Impact, we've sort of broken it down further to be more thoughtful about, where do we think we can have the most impact in generating development returns. And you'll see 6 different themes focused on the slide. The first being technology and infrastructure, the second being energy. And then the next 4 are themes that within the division where I sit, Office of Development Credit, we tend to focus quite a bit. And that is financial inclusion, meaning banks or non-bank financial institutions, microfinance institutions, leasing companies, impact funds, but we'll call it broadly financial intermediaries that help channel capital to underserved communities in the developing world. So I think it's fair to say that in many markets, it's very difficult to get a small business loan, or it's very difficult to get some capital as an entrepreneur to seed or grow your business. And so financial inclusion, including digital finance or fintech, is certainly a sector of interest to us. Additionally, food security and agriculture. This is a sector that's very personally important to me, having grown up in rural America. I have the privilege of helping to set up our food security unit at the DFC, which is a dedicated team of loan underwriters working on food security transactions. And when we say food security, we mean that term to encompass the whole chain from production, agriculture production, supply of inputs to farmers, providing credit to farmers, as well as financing for processing, production, logistics, and distribution. So projects, investments that support food security in any of those areas is very much of interest to our department as well. Healthcare, this was a growing focus in advance of the onset of the COVID-19 pandemic. I think it's fair to say that the COVID-19 pandemic has amplified the importance of having good quality health infrastructure in the international arena. So we are actively evaluating and funding projects in a variety of aspects of the health sector to include healthcare provision, hospitals, primary care facilities, as well as providing support to input production. So PP&E, pharmaceuticals or pharmaceutical products. And then the final theme, water, sanitation, and hygiene. You may often see this term as WASH, W-A-S-H. water, sanitation, and hygiene. We've done some pretty interesting transactions in this sector over the years. We've worked with a group called Water Equity, which invests capital into water-related projects in the international world. We've worked with companies that are involved in water conveyance, micro water distribution. We have also linked this to our food security initiative to talk a lot about the importance of improving nutrition in the world and access to clean water to support healthcare, quality healthcare as well. So you'll see that to some degree some of these themes interweave. Water important to healthcare, food security important for nutrition, and so it's no surprise that these themes are embedded in the roadmap for impact. What kinds of investments do we support? So we have a team of, in our group, roughly 50 or so origination officers that are evaluating various funding proposals on a daily basis. We are looking at a number of criteria when we're assessing how to not only make best use of our resources, but also comply with our internal guidelines and our goals. So these gating criteria that you see listed on this slide give you very high level indication of what kinds of investments might be a good fit for the DFC program. So first, projects are required to have a private sector component to them. Typically, our projects are majority owned by the private sector. So this contrasts from direct government to government lending, which is the purview of other entities, not necessarily DFC. We're working with borrowers who are private sector enterprises. All of our projects must adhere to strict social and environmental guidelines. We publish those on our website if you're interested to read more about them. But as we're evaluating the credit of a transaction like any bank would do, we're simultaneously looking at the developmental impact, both the positive impact as well as evaluating for any potential negative impacts and looking to avoid negative social or environmental impact. We also evaluate the potential for impact, specifically economic impact on the United States. So we will not fund projects that result in offshoring of, for example, manufacturing jobs for the U.S. or outsourcing U.S. Job functions. Rather, what we're doing is additional to any existing U.S. economic activity. We do have a country eligibility list, which you can look at on our website. I think right now we're open in approximately 150 or so countries, though there are a few countries where we are prohibited from working. So what I typically recommend to our prospective clients is that they check out our website and look at that list before engaging us to understand whether their country of interest is eligible for DFC funding of an investment. And if you have questions about a country on the list or perhaps a question about why a country is not on the list, you're welcome to reach out and we can work through that with you. And then we do have a few prohibited sectors where we don't work. Those are fairly obvious. I think we don't fund casinos, we don't fund tobacco manufacturing, and you can find, again, that list on our website. As far as the financing is concerned, and more specifically, when we look at a business plan, what are we looking for? We're looking at a couple of things. I'm looking at the bankability of the deal. So if we're being asked to consider a loan for the investment, let's say it's, again, a processing facility of agricultural commodities in West Africa, it's looking for a $10 million loan from the DFC. I want to understand the business model. I want to understand, what is the budget? What are the revenue projections? On what assumptions did they build those projections, and how do they expect to repay the loan? So just like any bank would do, we evaluate a business plan, we evaluate a financial model, a financial projections model, and provide feedback to the client or raise questions, and it's often an iterative process. We engage in a back and forth with the applicant to better understand the investment and whether we think it's a good fit for our funding. We also evaluate the management capacity. Our debt products are generally not funding startup enterprises. We can certainly consider funding existing enterprises that are looking at capital to expand, or providing a corporate loan to a company who's then opening up an affiliate or a subsidiary entity. But if it's a pure startup in the sense that this is a new line of work for the entrepreneur, they don't have existing financial statements that they can demonstrate to document their experience leading a company in this sector or this segment, then that would be less likely to fit our credit guidelines. And then finally, but perhaps most importantly, we're looking to understand both the impact potential of the investment as well as the additionality. So when we say the impact, what we mean is understanding how will this investment generate positive economic development or social development in the target market. So in the case of an agricultural processor, we could perhaps look at the impact that they have by providing good quality food products into the local market that aren't presently available, or the fact that they will be procuring their commodities from farmers and giving farmers a more stable source of income. We might look at their management team to look at are they bringing women into management roles, or do they have a disproportionate number of women hired in the labor force? So again, these are just a couple of indicative examples of ways we might consider the developmental impact of a transaction. And again, we have some information on our website that talks about how we think about and how we assess development impact. When we say additionality, what we mean by that, it's a very DFC term, but additionality means how are we being additional to the commercial markets or to the private capital markets? If this applicant is able to go and find a suitable loan from the private market, we're not looking to come in and crowd out that commercial lender. Rather, what we're looking to do is to complement the private sector and perhaps catalyze the private sector, the private capital markets to look at these deals. So oftentimes what companies will indicate when they approach us with an application is that either commercial debt is not available in the market. In some frontier markets, meaning some very challenging emerging markets, there may be very little to no private banking activity, or they may indicate that there are private commercial banks, but not offering long enough tenors to repay the loan. Perhaps they're able to get a 12-month loan, but they need a 5 or 10-year loan to really be able to sustainably repay a debt. So in that sense, we're being additional to the private capital markets. We're not coming in and taking away market share. Rather, we're trying to fill a void. I wanted to offer just a small list here of a couple of examples. I often find that it's easier to comprehend the kind of financing we offer when you think about it in a very real context. On our website, you'll no doubt see some press releases advertising some of our bigger projects. large energy and large other hard infrastructure projects. But I thought it might be interesting to illustrate some of the smaller or mid-sized transactions that we've done as the DFC. So if you look at this list here, a couple of observations. The first is that it's a pretty broad geography. So again, these are just, I think, 10 examples. Last year, I believe over the course of the fiscal year, we funded approximately 50 transactions, 50 to 60 transactions. These 10 are just 10, like I said, random small to mid-sized transactions from our most recent quarter. But you'll see it's a pretty diverse geography. You'll see India, you'll see a number of Latin American markets, Africa, specifically East Africa, as well as Southern Africa, as well as a transaction in the Ukraine. You'll also notice it's a pretty diverse array of sectors. So, for example, the first transaction here, 20 million in funding to a company called Samunati. Samunati is a financial services firm which provides financing and technical assistance to low-income farmers and enterprises throughout the agricultural value chain in India. Other examples of financial service include a company, a couple bullet points down, FinSocial in Colombia. That is a fintech company which has a digital lending platform, and they primarily serve teachers and others with otherwise limited access to finance in rural areas of the country. In the agribusiness sector, you'll note towards the bottom of the screen, $32 million in insurance to a company called Zambia Seed Company, which, as you may have gathered from the name, produces seeds that they distribute to smallholder farmers across Zambia. The last one I'll mention is the third bullet from the top, $11 million in financing to a company called Australis Aquaculture in Vietnam. This is the second loan we've made to Australis. They produce barramundi, a fish in Vietnam for sale across a number of regions. But again, these are companies which are having a developmental impact in the market and which are benefiting from the availability of DFC funding, which otherwise may not have been available to them. The last slide I have before we transition to any discussion or Q&A is my contact information, as well as the link to the DFC website, which again is dfc.gov. There are a lot of helpful resources on the website if you're interested in learning more about our products. We do have a frequently asked questions guide. We have an eligibility checklist. We have a variety of resources to help you develop the application materials for the loan. We also have public information summaries for the different investments or the different loans we make. So if you're interested to read more detail, this is non-business confidential summary. So if you're interested to read more detail about any of the companies we've worked with or the types of transactions we've supported, you can find those on our website in the section titled Active Projects. So with that, I will end my formal remarks. I'll turn it back over to you, Michael, and certainly can remain available to the extent that there are questions or further discussion topics.
Great. Well, Alison, this is great, and I'm going to keep you up on a side-by-side on this, and we'll definitely put your contact information in the show notes underneath there. And it's always great getting the overview of the United States government at work in economically challenged countries and seeing how things can really be leveraged to helping along a number of those touch points, which is food security, water, energy, micro enterprise, entrepreneurship, and these are some wonderful things. One of the things I know I had a number of questions to really help our audience understand and kind of put a kind of picture on this is we were working with the trade commissioners of Ecuador about a year ago, 2 years ago. We were looking at this because a lot of the same types of things that DFC does in this program is very similar to what a lot of our US-based groups do with the small business development centers. And what we had come up with was an example of a Ecuadorian national who had come to the United States, and she was already importing dragon fruit. So she was a US resident at this point, but she also had a farm in Ecuador and wanted to look at expanding her acreage, doubling her acreage, but needing some of the technical support of how they can expand their operations, how they can create some training opportunities, how they could modernize their production, and understanding having a very good linear path of helping them grow and expand their business, which would then be importing dragon fruit into the United States at the end of the day. So it wound up being an entire circle at that point. And to also be clear, where there are things like Heifer Project and Kiva microlending, you're really talking about above what's the minimum threshold that you really want to be at. So what's the minimum threshold, Alison?
Sure. So our minimum loan size is typically about 1 million US. We have, however, engaged directly in funding entities like Kiva to be able to channel capital into smaller amounts that perhaps we otherwise couldn't do efficiently, right? So that is why financial services is such a significant part of our portfolio, is to be able to fund intermediaries, often with a local presence, which we wouldn't have in a market like Ecuador, but fund financial intermediaries or financial intermediaries that are looking to enter into Ecuador to provide those smaller lines of capital. But yes, in the case of us, if we had an example of a women entrepreneur, which I like that you used an example of a woman, so thank you, Michael. If you had a woman who had a farming operation in a market like Ecuador who was looking for even just $1 million to be able to acquire new land, acquire some equipment, to maybe improve the packing houses or add addition packing houses, we could certainly consider funding an enterprise like that. And it might also be a compelling candidate for technical assistance, which would preempt the loan. The technical assistance would come first, provide that smaller amount of capital. That might be, a couple $1,000, $100,000, to be able to make certain improvements to the business model or perform certain studies, and then allow her to go forward with her loan request.
Right, and that's where I really fell in love with the program when we started talking a couple of years ago about this, where it is that technical assistance, that getting businesses brought up to the sophistication, because a lot of people in different countries don't understand the power of leverage with money. Even when they come to the United States, some will try and pay cash for a $2 million building, which is always interesting to see. But like in this example, talking with this woman who is importing dragon fruit, it was the type of produce that they were bringing in, but needing their handheld from I'll call it really a U.S. perspective of creating that compelling business plan that becomes financeable. And so having technical assistance grants to really come in and get either local expertise or international expertise to help grow them, I think it is just really a wonderful, compelling idea. because as people are starting to grow and retire from the United States, they're looking to give back into the community in meaningful ways. And I think, what are some of the U.S. residency requirements or non-residency requirements for people abroad and how that works? So let's pretend, Alison, you and I were getting into business. You were the 51% women business-owned enterprise. I was coming in as basically the grunt worker to help get everything done. What would be like that if you were expanding in one of these economically challenged countries?
Sure, and it's a really good question you asked, Michael, because it's one of the several ways in which the DFC distinguished itself from its predecessor, OPIC. So as OPIC, we had some very specific requirements, very specific percentage thresholds that must be met in the ownership structure to qualify for OPIC funding. Those do not apply in the DFC. In the DFC, we do not have a specific percentage threshold, ownership threshold that must be held by U.S. citizens to qualify for DFC funding. Now, our preference is to work with U.S. firms, and we're doing quite a bit to encourage U.S. companies to, talk to us, to share their thoughts and their plans, to engage with the small business development centers, to be able to help companies develop compelling growth plans in international markets. But we don't have a specific percentage threshold that must be met.
Okay. And I know you and I talked about this another time, was how United States companies that are investing abroad, this actually does help their bottom line inside the United States. And one of our compelling discussion points we have with our international trade offices in the Midwest is working with some of our U.S. companies looking to establish U.S. subsidiaries in these economically challenged countries. And what did you say, there's roughly 100 plus of them? So there's a number of different opportunities available. But as they grow and expand their companies, they're getting some certainty of knowing that they have the good faith backing of the United States for capital, which gives them a little bit more certainty. Coming from the United States into a foreign market, they understand how to create their business model for financing. But at the end of the day, that's helping also enlarge a presence for a U.S. company that's already in the United States, expanding their footprint.
Absolutely. And I think, one of the misconceptions when we talk about foreign direct investment is that it's offshoring, it's outsourcing. And I've spent now 16 years with either DFC or OPIC and can tell you it's very rare for me to talk to a company that's thinking about offshoring. Which is good because I'd have to tell them, no, I can't help them do that. But I am, if there's one message I would love to get across to business owners is to not get stuck in the mentality that foreign direct investment is offshoring, that it's only large investments like infrastructure. And an example I can give is a company called Quantum ID. They're based in Cambridge, Massachusetts, founded by an entrepreneur, an alum of MIT, who developed a tracking technology that's used in the context of cargo, making sure that when you're shipping cargo by air, in particular, that you know where it is and that it's getting to the destination, and you can be more efficient about the logistics process. And we've helped them enter both the markets of India as well as the Philippines. So I think one of the benefits to pursuing a more global strategy is, you're finding new markets when you do that. So you enter one market and then quickly learn there's opportunities in maybe another one or two neighboring markets. You also diversify your customer base. And so when there are economic shocks that are contained to a particular region, you've diversified your business line so that you're not bearing the brunt of that impact on your bottom line. So I think there's so much benefit to getting out of the mentality of you're a local business, and really thinking about the importance of having a global strategy.
Right. And then let's pretend again, you and I are starting a company and we're thinking about entering into 3 different Latin American countries. Would there be an opportunity to apply for technical assistance grants to help develop the studies of expanding an existing company, or leveraging both of our existing backgrounds as a new company, because we would have the management expertise to then do a strategic initiative that ticked off a number of boxes for those countries?
Yeah, our technical assistance mandate is defined pretty broadly. And so I think time will tell how we refine that, or where we find we can be most impactful. But we do have the ability to support feasibility studies, which I think would nicely encapsulate what you've just said. We do try to ensure, recognizing that we're not the only technical assistance provider, even within the U.S. government, that we are being complementary to other programming, right? It's not a very private sector friendly to have competing agencies, and conflicting mandates. So there is, of course, the U.S. Trade and Development Agency, U.S. TDA, which provides feasibility studies. They tend to be very focused in their programming. So they're very active in the infrastructure, the energy, the transportation sector. USAID, U.S. Agency for International Development, also similarly has some funding available. So we have an individual identified within our agency who is the managing director of technical assistance. He works very closely with those counterparts in the other agencies to make sure that if there's another technical assistance or feasibility study funding program that's already operational and is well suited, that we can try to plug our client into that. But otherwise, yes, we do have that capability.
Okay, and I think I have time for one other question before we wrap. And I think, because again, every time I talk with you, I always monopolize you, which is always great because I get all my questions answered. And I think I think one of the questions I have is, in just kind of wrapping up, is there's a total difference. A lot of the businesses that are exporting are familiar with the Ex-Im Bank, and you are not the Ex-Im Bank. So just kind of, can you compare and contrast what is the responsibilities of the Ex-Im Bank and what DFC does, and we'll finish with that.
No, that's great. And in fact, I was tempted to include a slide about this because I think it's fair to say in the U.S. government, you are encountering all these acronyms with similar sounding missions, and sometimes hard to understand, where one ends and the next begins. But Ex-Im Bank, or Export-Import Bank, is another federal agency with whom we've worked closely for many years. Their mandate, their charter, however, is quite different. They are the U.S. government's official export credit agency. And so I tend to think about this not from the perspective of the agency, but from the perspective of the business person. So if I'm a business person and I have a good or service that I want to sell to a foreign buyer, and that's the extent of our transaction. It's buyer-seller. Ex-Im Bank, or perhaps the Small Business Administration's trade office, would be the appropriate points of contact. However, once you're looking at actually taking a more direct participation in the overseas business activity. So feet on the ground is the way I usually think about it. You're either going to have an ownership stake in that overseas enterprise, or you're going to be entering into a management contract to have ongoing management and supervision on the ground support in that foreign country. That's what typically then prompts the DFC to be the more appropriate funding entity, because we're not simply issuing a letter of credit or some sort of an export credit product. Rather, we're providing funding to that ongoing concern or that business concern in the foreign country that will repay our funding from the business activity conducted in that foreign market.
Great. Well, Allison, I've taken up all of our time today, and I always love talking with you. So I'm looking forward to seeing you when I get out to Select USA, should they have it next June. And so excited for that, and then bringing you back as we find other opportunities to work together. So again, Allison, I wanted to thank you for your time today, and I look forward to seeing you in the future.
Thank you, Michael. Really appreciate your time and the time of our attendees and look forward to staying in contact.